Should you buy Google shares? Should you buy Microsoft? Or is it all over for big tech? The figures came in higher than expected, but it wasn't good enough for the market. You say, how can it be bigger than expected and yet not good enough for the market? Well, there's slowdown in some particular sectors. I would argue they're fairly obvious, and they should have been obvious to the people that are looking at the shares. So if we look at Microsoft, its cloud business has grown at such an incredible amount. It's still growing at a fantastic percentage. In fact, it's over 18%. If we look at Google, there's a slowdown in people spending money on ads. Again, we're in a situation where interest rates have been high for a reasonable period of time. People are cutting back on things, and people are also laying off staff. So obviously there's going to be a slowdown. So when we look at the market and we see Google shares down, we see Microsoft shares down, what does it really mean? Well, for me, it means there's an opportunity to buy. Could there be more volatility? Of course, there can always be more short-term volatility. But if we look at big tech, we know in today's world that those companies are going to continue to dominate. Think about it. There's a moat. How difficult is it for another company to compete against Google? How difficult is it for another company to compete against Microsoft? In other words, they're companies that are built with good, strong structures, and they're in great positions. So whilst you may get a slowdown when interest rates are high, then of course economies, they tend to ebb and flow. We're in a situation right now where there is a situation where people are spending slightly less, and so are companies. But of course things change, and those things will change very quickly. And when they change, these shares, in my opinion, will increase quite rapidly. So would I buy or would I sell? Well, actually right now, I'd be looking for opportunities. But if I was investing, I wouldn't invest all on the same day. In other words, I'd drip into the market. Why? Well, because the market has gone down on these particular shares. You can pick up some shares perhaps today. You can always talk to a financial advisor or give you the best advice, because it does depend on your own risk attitude. But if you put some in today, some in on another day following, because who knows, the market might dip even further. You say, well, it might go up. Well, it might indeed. But if you average the cost, average into the market, you're likely statistically to make a higher return. Obviously, it's a personal decision, but if you're asking, are these good long-term companies? For me, absolutely. They're great long-term companies. We've now got figures to come from Meta and Amazon. If you keep tuned to this channel, I'll give you an update on what those companies are doing. Because market expectations are so high, you could see them coming in slightly lower. And if that happens, again, we'll give you an update on what we think and what's going to happen to those companies going forward. Thanks for watching. Please like and share the video.